Good morning, traders. This is Monday, the 26th of January, 2015. It's about 7:11 a.m. Chicago time. This is a pre-recorded Trader Bite. I have some other commitments I need to attend to this morning and didn't want to skip a day if I didn't have to. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick look at the news. Greece's Syriza party set to become the first anti-austerity majority party in the Eurozone. This was key for us, especially on the heels of the EU decision or the ECB decision on Thursday. The Athens Stock Exchange traded lower by about 5% and it impaired its losses later in the session, in the European session. German IFO business climate data mixed. DAX briefly made new record highs. So the German market is dismissing some of that. We saw a gap down in the ES overnight on that Greece news. The significance of this news is that it creates more uncertainty and therefore more fear, which in return creates volatility, which for traders creates opportunity for gain and loss. But this is something to be watched. The sequence of events with this has been the EU Court of Justice decision a couple weeks back, the EU decision for QE last week, and then we have Greece right now. Spain is starting to, there's a lot of chatter out of Spain basically following or reinforcing Greece's position. I suspect that Spain is likely to take the same position with regards to austerity. These guys promised all kinds of things to get aid and now are wanting to back out on that. The Finnish government also is complaining today that Finland should not have to finance poor policy in other EU countries. So that is the risk here, that the whole thing will come apart. And that's what we need to watch for. I think the better opportunities to trade this are in Europe, and the better products to do it in are the Euro stocks and the Bund, both on Eurex. Not only are they more cost effective, in other words, there are no member, non-member rates for online traders. It's all the same. It's a cheaper product, and they've been moving really nicely. I'll look at that in a minute. As far as looking ahead here, at 8 Central, the Euro area finance ministers meet in Brussels. Draghi's involved. It's uncertain if Draghi has further comments. At 9:30, we have the January Dallas Fed manufacturers activity, expecting 3.2. At 10:30, the Treasuries to sell 50 billion in 3-month and 6-month bills. Since it's Monday, let's look down the line at the week. On Tuesday, we have UK GDP, US services PMI. We also have new home sales in the US, consumer confidence, and Richmond Fed. A reminder also that tomorrow we'll have the Apple earnings announcement. On Wednesday, we have US crude oil, FOMC rate decision. We also have the Reserve Bank of New Zealand's rate decision. Remember, there's a big carry trade there. And then after market, we have Facebook announcing. On Thursday, German CPI unemployment change, U.S. initial claims, pending home sales, nat gas, and Thursday afternoon, we have Google and Amazon announcing. And then on Friday, we have Eurozone CPI, U.S. GDP, and Chicago PMI, as well as Michigan sentiment, which is a final number. So as you can see, the week is fairly busy, especially with the rate decision on Wednesday. We want to see what happens here, what the comments are from Fed's Yellen in reaction to what's going on in Europe. Let's look at the technical picture. There's not much to share here on the technical side. Okay, so The market held some pretty good levels on Friday. It looked like the primary hypo of hitting 2060 was on deck on Friday. You could see here the opening swing was dominant throughout the day until the close. The market tested below and above and below and above, um, completely sideways day. Volume overall was much less than norm, and so was the range. If we look at the volume here, you can see it how it dropped back down to 1.12. We've been trading about 1.8 or 1.6, 1.5, and range just collapsed. The prior day range is at 40, and then Friday's range is at 13.75. Very little participation on this day. Did not see the higher time frame that day, except on the close. But even then, it was not a strong push. It just seemed to slide down almost as if in a long liquidation, and that's really what we ended up with. Very balanced profile. My bet was to the long side, consolidation all day, holding the mid. You can see once we rotated up here, we just held the mid, and with a lot of kurtosis or a lot of heavy volume occurring in the higher side of the profile, the expectation was for this to continue higher, take out the 59 quarter, and get to 2060 to get that over with on the retest, giving us a weak 2060 double top and continued highs to start targeting that 2088.75 all-time high. Instead, on the close, it just started to give up. Once it broke the mid, it pulled back for a retest, and then it started to take out the IB low, and it just ran downwards. You could see here that Delta was firmly on the short side. So in addition to this, so that's what we got on Friday. If we look at the overall picture overnight, we got down to 2025 on a gap, and we've taken that back. The overnight session is traded. Let me pull up the overnight since I'm talking about it. So here we open on a gap on the overnight session. We open right down here at 2035. Test down to 2550. If you recall, 2550 is the bottom of the MCHVN, or the high volume node, and we've rotated above it all night. We've traded around the MCHVN, and then finally, when the Europeans opened at 2 o'clock, I did expect some fireworks in the European session, and just really kind of a sad session, really. And we managed to get back and close the gap, 2043.50 on the overnight session. We have not done so on the day session. So the overnight high is equal to Friday's close, pit close. So that puts us in a very interesting situation. If you look at the big picture, excuse the sniffling, I'm fighting a cold again. Now remember, I said 2025 right down here. So if you look at what happened here, we opened at 2035, which is right in this MCLVN area. We went down and tested this high volume node. This is the this is a key area here, and we're testing it, and we are holding. We held it again, and we're moving back up into the next high volume node. And then, of course, the key high volume node is up here in the 2057 to 2065 area, with the MCVPOC at 2060. So what the market's doing is it's kind of rerunning the numbers down into the 2025 area, and has found buyers and is back up above into this middle high volume node. These dots represent volume, and that's where we are. So if I zoom out, you can see where the main prices are, and we're stuck at this right here in this this area. So that creates a little bit of an interesting open, because could go either way. charts are laggy today. It could go either way. What we have is basically the market pushing down and then coming back up and holding right at the gap. We closed right at the low, so I expect that the market will rotate around this point of control to this morning. I expect some sellers to step in on the open, but if the market regains Friday's range, we're looking at 2054 above. If it does not, then we start to work through the areas below us, and the areas below us start with the 2031 LVN, and then all the way down to 2028 again. If you recall, 2028, good old 2028 number. So, and then from there, it's just noise. There's not much to do here. I think today is going to be mostly choppy, and it all depends on the open. The open is in an hour and 10 minutes, so it's hard to see what it's likely to do from here. So I don't have any probability or certainty, not certainty, but more a likelihood of one thing happening over another yet. But overall, I think the target is still 2060 above, with 2055.75 setting up a high volume node that is to be reckoned with here, left behind from Friday. So that's going to be the key target today. But overall, we want the 2060 back. I think the buyers are still in control long term. 2060 gets taken out, it brings us up to 2072.50 and 2077.75 above. A quick look at the Euro stocks, and then I have to jet. The Euro stocks made new highs on Friday. This new highs for the year. This profile goes a whole lot back, and it climbs all the way up. And this profile goes to June 20th of 2007, the last all-time high of 40.60, adjusted for their equalized sessions or contracts. And what it's doing is it's trading this monstrous LVN zone, and the expectation for the Euro stocks is that once it consolidates today, I expect it to break higher. We have a weak high on the overnight session. If you look at this fairly poor high, this is part of the reason I think the ES is likely to climb higher into yesterday's range or Friday's range and continue back up into the 2050s this morning. But the Euro stocks targeting filling this LVN zone. You can see there's no volume on the composite all the way up until we climb into 35.40, and we're trading at 33.93. So the Euro stocks holding steady. After today, I'll start another MC. These are overlapping days. This is an inside day so far. The Europeans are just sitting sideways. There's very little delta in the market, and there's not much going on here. So I expect this to be a continue to be fairly quiet day with an upward skew. Overall, in crude oil, we're looking at the market just kind of continuing to hold this large MC area. It has already tested the multiple prongs here on the MC, the 46.90, and then into the 48. We tested the 48 on Thursday or Wednesday, and then the upper prong is still at 49.20, and the market's holding the lower end. So oil looks like it's likely to battle some more, but it is balancing, and you can see there's a fairly heavy balance zone here. Prices are being accepted in this area, with value being presented at 46.13 to 48.87 in crude oil. So far it is in balance, and I expect another leg down, but I do not expect it to be an impulsive leg. So in crude, over the next week or so, I expect another leg down to complete the continuation move, take out this low from the impulsive move, and then it's likely to come back into balance and continue to be stuck here. I think crude oil producers are going to be stuck with the 46 to 49 price for a little bit, for a couple weeks, I think, before this has enough to get resolved. I'll leave you with those. Good luck to you today, and tomorrow, again, this will be pre-recorded, and then back to the normal schedule of live Trader Bites on Wednesday. Good luck. Take care.